Experts are warning Australians to brace for more interest rate pain in the year ahead. 2022 was a grueling year for anyone with a home loan, with 8 Reserve Bank rate hikes adding 3% to the average mortgage rate and $800 to the typical borrower's monthly repayment. Whilst borrowers are relieved to see the pace of tightening slow down, they endured 4 harrowing months of 50 basis point increases from June to September. A number of economists believe there is a long way still to go until inflation is under wraps. After over a decade of rate cutting, the Reserve Bank of Australia is forecast to hike the cash rate periodically over the next 6 to 18 months. Homeowners and would-be borrowers may be nervously wondering, how high will interest rates go? And that's exactly what we're going to look at today. We're going to look at how high interest rates are likely to go in 2023. We're going to cover everything you need to know step by step, so keep watching. Let's start off with what the Reserve Bank of Australia did in 2022. Interest rates have gone up 8 times since May 2022, which saw the cash rate lift 3% to 3.1% in December of 2022, which was a massive increase, with the cash rate only being at 0.1% in April in 2022. Now, the cash rate increased mainly due to the pickup in inflation. We also saw rising energy costs and commodity prices brought on by Russia's invasion of Ukraine in late February. Inflation increased to 5.1% in the year to the March quarter. This surge was primarily driven by rising food and fuel prices. So what are analysts saying out there? Well, analysts see inflation to remain above the RBA's target. Inflation is a primary driver that forces the RBA to rethink its approach and tightening policy. The Australian inflationary forecast is the key for the central bank in shaping their interest rate decisions in the future. The Reserve Bank is expecting inflation to peak at around 8% by the end of 2022, which is higher than its previous estimate, which was 7.75%, which they made in August. They cite strong domestic demand, a tightening labor market, flood-related disruptions, and capacity constraints as some sectors are contributing to the upwards pressure on prices, while upstream pressures are easing globally. Earlier increases in input costs are expected to contribute to inflationary pressures in the near term. According to RBA, in one of their more recent statements, the Reserve Bank estimates inflation to ease to 6.25% in June 2023, then dropping to 4.25% in December, and then 3% range by December 2024. Whilst uncertainty seems to be the feature in today's economy, ANZ, CommBank, NAB, and Westpac have some ideas of where things might be heading. We're going to take a look at their forecasts. So let's see where Australian interest rates are forecast to go in 2023. The big 4 banks have all cast their predictions for where the next few years of cash rate movements will be. Commonwealth Bank believes that the Reserve Bank will lift the cash rate just one more time in 2023. It's long touted delays in the transmission of monetary policy as a big reason why the Reserve Bank would slow down the pace of rate hikes. Economists at Westpac and ANZ suspect the Reserve Bank will have to raise the cash rate by another 75 basis points to address the inflationary challenge. This would give us a terminal cash rate of 3.85% by May 2023. As Westpac economists team put it, there's still more tightening to come. And even once this is done, we expect the central bank to signal a strong commitment to lowering inflation permanently. They add that restrictive monetary policy could be the norm for much longer than markets are currently expecting, particularly if inflation turns out to be more resistant to moving down than we'd like. Westpac predicts that the rates could go as high as 3.85% by March 2023. NAB forecast is a little bit more conservative. It expects the cash rate to hit 3.6% by March 2023, which would push the average variable rate to 6.48%. For an average $1 million home loan, that equates to an extra $2,100 per month compared to before the cash rate had any increases. For February 2023, which is the next Reserve Bank meeting, all the big 4 banks have forecast another 25 basis point rate hike. Keep in mind that these are just predictions and that the big banks are subject to change these forecasts. So as far as the big 4 cash rate forecasts go, Commonwealth Bank is predicting the cash rate will hit its peak of 3.35% by February of 2023, but then is going to drop to 2.85% by November of 2023. Westpac is saying that the cash rate will hit 3.85% in May of 2023, but then dropped to 2.85% by November of 2024. NAB predicting 3.6% by March 2023, remaining steady until 2024. ANZ saying 3.85% by May 2023, then dropping to 3.6% by May 2024. Following each of the RBA's rate rise decisions in 2022, most lenders passed on the full rate hike to their variable rate customers without hesitation. Each rate hike translates to higher monthly mortgage repayments. And with so many fixed rate terms set to expire in the coming months, analysts and policymakers are on the lookout for signs that households won't be able to cope. As we can see on the screen here, depending on the bank and their prediction, let's say you fixed in at 1.99% 2 years ago and you're coming up off your fixed rate. We can see if rates do peak at say 3.85% like ANZ and Westpac are predicting, the average variable rate would be 6.27%. This is nearly 3 times the rate of what many have fixed in previously, and this might have dire consequences, and I'm sure is one that the Reserve Bank will be keeping an eager eye on and seeing what actually happens. How have rate hikes affected property prices? The immediate effect of such a rapid tightening of monetary policy is a decrease in borrowing power. This drives down demand as prospective borrowers find themselves either priced out of the market or forced to look at cheaper properties than they'd wish. According to property research firm CoreLogic, property values have fallen around 7% since its peak in April of 2022. In dollar terms, that means the average Australian home has shed around $53,000 in value. The high rate environment will continue to test the property market in 2023. But there are signs that conditions are easing. 3 months ago, Sydney housing values were falling at a monthly rate of 2.3%. That is now reduced by a full percentage point to 1.3% in November. In July, Melbourne home values were falling by 1.5% over the month, with the monthly decline almost halving by 0.8%. With expected easing in inflation, an increase in unemployment rate, and slowing growth in the economy, without giving any details, Lowe said that interest rates would need to increase further, but not on a preset path. It is closely monitoring the global economy, household spending, and wage and price setting behavior. The size and timing of future interest rate increases will continue to be determined by the incoming data and the board's assessment of the outlook for inflation and the labor market. As we talked about in previous videos, the Reserve Bank has target inflation set at 2 to 3%. So long as we're within this bracket, that's where we'll start to see the Reserve Bank start to slow down on tightening or even potentially provide stimulus if we do fall under that 2%. There's been many analysts that have forecast the Reserve Bank would continue to hike rates until 2023. Many analysts are expecting the Reserve Bank to begin cutting rates in 2024. Predicting a cash rate in the future can be quite difficult due to the various ingredients at play, which shapes the Reserve Bank interest rate decisions, such as inflation, economic growth, and the unemployment rate. Such variables are difficult to forecast because they are affected by so many different factors, such as energy and commodity prices, as well as global economic growth and many other factors. Keep in mind that analyst predictions can be wrong. So based on the forecasts and the predictions we're seeing, it's looking like the cash rate is going to peak at some point, with a possibility that the cash rate might come down at the end of 2023 or sometime in 2024. If you're currently on a fixed rate and the fixed rate's about to end soon, well, get in touch with us. You are going to find that your repayments might actually triple, which is a huge increase on your monthly budget. Getting in touch with a mortgage broker like ourselves, we'll be able to review your current position, strategize, and find solutions that are going to suit you so you can cope with the increased elevated mortgage rates which we're currently seeing at the moment. Did you know here at Hunter Galloway, we're mortgage brokers and we help home buyers right around Australia. So if you're looking to refinance, purchase your first home, or buy an investment property, we can help. Simply call us on 1300 088 065 or visit our website huntergalloway.com.au, and we'll see you next time.